entrepreneurship and intellectual development. Operating from his apartment, Dalio initially focused on providing research and consulting services to corporate clients who needed help navigating currency and interest rate risks. His first major breakthrough came in 1982 when he correctly predicted that Mexico would default on its debt, a forecast that seemed impossible to most economists since countries supposedly never defaulted. Dalio's analysis was based on understanding debt cycles and recognizing unsustainable borrowing patterns, principles that would later become core to Bridgewater's investment philosophy. By 1985, the firm had grown enough to move into its first real office in Westport, Connecticut, deliberately choosing a location away from Wall Street's groupthink mentality. Dalio hired his first employees, including Bob Prince and Greg Jensen, who would become long-term partners in building the firm. The company's early success came from its ability to provide institutional clients with independent research that often contradicted conventional wisdom. Dalio was already developing what would become known as his principles approach to decision-making, systematically documenting successful strategies and learning from mistakes. By the late 1980s, Bridgewater was managing money for some of the world's largest institutional investors, including Eastman Kodak's pension fund and the World Bank. The 1990s marked Bridgewater's transformation from boutique advisory firm to serious institutional money manager, driven by Dalio's development of systematic investment strategies. His breakthrough insight was creating what he called pure alpha, a strategy designed to generate returns uncorrelated with traditional markets by identifying inefficiencies across global markets. This wasn't traditional stock picking or following economic trends. It was about understanding the relationships between different asset classes, currencies, and economic indicators across dozens of countries. Dalio spent years studying historical economic data, identifying patterns in how economies responded to different conditions like rising inflation, changing demographics, or shifting monetary policies. He discovered that most investors had portfolios that were dangerously concentrated in their home country's markets and overly dependent on economic growth. His solution was radical diversification across asset classes, countries, and economic environments. By 1996, Bridgewater was managing over $1 billion, a milestone that established the firm among the industry's elite.